Hello students, in this lecture we are going to see what is fund and what is flow of fund. So the word fund has, in narrow sense, we can say it refers to cash resources of the business. In a broader sense, we can say the all resources of the business are funds. So all assets and liabilities we can consider as a fund. But in case of fund flow statement, what is fund? Fund means here fund refers to net working capital. Net working capital. Okay. So how we calculate the our net working capital? When we deduct the current liabilities from the current asset, we get the working capital. We know. Okay. Uh, Now, what is flow of fund? So flow of fund means change in working capital. Flow of fund means change in working capital. That is called flow of fund. So uh, in flow of fund there might there may be some transaction which may increase the working capital, or there are some transaction which can decrease the working capital. Okay, that is called change in working capital. Means increase in working capital or decrease in working capital, that is called change in working capital, and change in working capital is equal to flow of fund. Okay. uh, Now there are some transactions which affect the flow of fund, and there are some transactions which may not affect the flow of fund. Okay. Now the transaction which contains the current asset and non-current asset, that is fixed asset, can affect the flow of fund. Transaction which has current asset and non-current liabilities uh, may affect the flow of fund. Okay. Transaction having or transaction affecting the current liabilities and non-current liabilities may affect the flow of fund. Transaction which affect the current liabilities and non-current asset will be considered as they are affecting the flow of fund. They are changing the flow of fund. Okay. And there are some transaction which will not affect the flow of fund. Such transactions can include the current assets and current liabilities. Transaction having current asset and current liability may not affect the flow of fund. Okay. And similarly, transaction having non-current asset and non-current liabilities, or transaction affecting the non-current asset and non-current liabilities, may not affect the flow of fund. So working capital will remain as it is in case transaction which not affecting the flow of fund, and transaction which are affecting the flow of fund, in that case working capital may increase or decrease. Okay. So we can say that when both the aspects of business transaction affect the assets and liabilities of current category and non-current category, there will be no change in working capital. Hence, there is no flow of fund. But when aspect of business transaction affecting the current category and the other affect non-current category, there will be flow of fund due to change in working capital. Now we'll see one by one transaction which affect the flow of fund. Transaction which will affect the flow of fund. Okay. Suppose when machinery is purchased for cash. So machinery is a which type of asset? Machinery is a non-current asset or fixed asset, and cash is a current asset, right? So here in this case, when we purchased a machinery for cash, the total current asset of the concern will reduce without any corresponding change in current liability. Hence the working capital will decrease. When we purchased a fixed asset, cash is going out. It means what? There will be decrease in working capital. suppose if we sold the fixed asset, then for cash, then fixed asset and the cash is current asset. So two aspects are affecting here. One is a fixed asset and another one is a cash is a current asset, and fixed asset, that is a machinery. If we sold the machinery, then what will happen here? In this case, current assets of the concern will increase because we are getting the cash without any change in current liabilities, hence the working capital increases. Okay, suppose a transaction having affecting the current asset and non-current liabilities. In that case, suppose if equity share capital is issued for cash, then the total current asset of the concern will increase without any corresponding increase in current liabilities, hence there is an increase in working capital. Similarly, if total loans or debentures are repaid in cash, then there is a reduction in current asset without any reduction in current liability, hence there is decrease in working capital. Now the third, when a transaction affecting the current liabilities and non-current liabilities, then suppose if the debenture or shares are issued in settlement of creditors, then there is a decrease in current liability without any corresponding decrease in current asset, hence there is increase in the working capital. So it is affecting the working capital, so it will affect the flow of fund. Now the fourth category, transaction includes or affecting the current liabilities or non-current asset. For example, if any fixed asset is purchased on credit, then there is a increase in current liabilities without any change in current asset, hence there is decrease in working capital. Okay, so here working capital is affecting, it means that there is a flow of fund. Okay, and another category is there, a transaction that will not affect the flow of fund. Suppose a transaction affecting the current assets and current liabilities, in that case there will not be a flow of fund because current working capital is not changing, that will remain as it is. Okay, suppose if cash is paid to creditors or goods are sold on credit or cash is collected from debtors, then there will be no change in the working capital, hence there is a no flow of fund. Then in another category, if transaction affects the non-current asset and non-current liabilities, then there will not be a flow of fund, there will not be change in working capital. Flow of fund means change in working capital. So transaction affecting the non-current asset and non-current liabilities, in that case working capital will remain as it is and there will not be flow of fund. Suppose if building is acquired by issue of debenture or shares, then there will not be any change in working capital. Similarly, if long-term loans or debentures are redeemed by the issue of shares or out of sale proceed of fixed asset, then there will not be flow of fund. Okay.